What's going on, everyone? Welcome back to another trade breakdown video. In this video I will break down two of my trades which I took on the EURUSD and the crude oil. So starting with the EURUSD trade, I am on the EURUSD daily chart. On the left side I have the EURUSD, and on the right side I have the GBP/USD for the correlation. So the first thing we are noticing on the daily chart is the SMT divergence. The GBP/USD is trading that expansion candle, taking the previous day high, shallow run above that, and then it is going to the downside. Same on the EURUSD. We are having an SMT divergence. The GBP/USD is taking the previous day high, and the EURUSD is weaker and creating that SMT divergence. So that is our daily confirmation that the price is going downwards. Now we will drop down to the 4-hour chart to align ourselves with that 4-hour expansion candle. So here I am on the 4-hour chart, and we have that SMT divergence, and clearly we are in a bearish trend, a bearish institutional order flow, up close candles followed by closure below. Then again we retrace into this fair value gap, and now we are closing below the up close candles once again. So that means that we are in a bearish trend, and we will continue to the downside and marking these failure swings for my target. Now on the right side you can see the candle which is creating that open high and then closing to the downside. So this probably be an open high low close candle, a bearish expansion candle. Now I would expect the 5 a.m. candle to be an open high low close candle or a bearish expansion candle. Now on the 5 a.m. we opened up and then created a small wick, and now we are expanding to the downside. Now all I need to do is trade the market maker model from the 1 hour to M5. So I would drop down to the 1 hour chart. So here on the 1 hour chart, you can clearly see we are in a downtrend, up close candles followed by closure below, change in the state of delivery and intraday, and we are expanding crazily to the downside. And on the right side, I have the 4-hour candles. So this is the 5 a.m. candle. It opened up, then created its high, and now it is expanding to the downside. But I cannot trade the market until there's a swing point, because I would trade the market maker model within that swing point. So I would wait for a swing point to form. Now with the 8 a.m. candle, as you can see, we retrace into this fair value gap on the GBP/USD and on the EURUSD. And another thing, we are having SMT divergence at this swing point, at this high. The GBP/USD is taking this high while the euro is weaker, and it is reaching towards these lows right here. So now I would drop down to the 5-minute chart to trade that market maker model, or T-Trade's fractal model. So here on the 5-minute chart, you can see we have the reversal inside this candle, a change in the state of delivery, and we are having SMT divergence at those hourly swings, and we have a drawn liquidity right here. Time when I open the chart, this continuation order block was forming, so I checked the narrative and then I traded that. You can always trade continuation. If you are missing the reversal entries, don't be afraid of that. The price one can expand crazily to the downside, and if it is expanding, then you have to wait for another opportunity. But we have a continuation order block right here, up close candles followed by closure below, and up close candles are tapping into this fair value gap, which is the point of interest. So what I did, I put my limit order here, my stop loss above this high right here, and I targeted 2R because the price expanded too much, so I would get the 2R and be okay with that. My 2R objective is reached. So this was the first trade breakdown, and now I will go over the second trade which I took on the crude oil. So now for the second trade breakdown, I am on the crude oil daily chart. On the right side, I have the gasoline daily chart, and on the left side, I have the crude oil. And as you can see, we are forming an SMT divergence at the previous day high. The crude oil is taking the previous day high, while the gasoline is creating that failure swing. And our long-term bias is bearish because we are closing below the up close candles, and we have a continuation purge up these highs right here. So now we have failure swing to the downside, so I can expect a down move. So this was my daily bias. Now dropping down to the 4-hour chart. So dropping down to the 4-hour chart, we have SMT divergence at those highs. The RB, the gasoline, is creating that lower low, and the US oil is taking that high, creating SMT divergence. Also, we are having a 2 a.m. reversal which is telling us that the 6am is going to be an open high low close candle because we are in a downtrend and we are forming a swing point on the 4-hour chart with SMT divergence on its highs. So it means the 6am is going to be an expansion candle to the downside. So keeping that in mind, I would draw the 6am opening and I would drop down to the 1-hour chart to trade that 1 hour to M5 market maker model. Now here on the 1-hour chart, you can see we have the 6am opening. It opened up and then it is creating its high inside this fair value gap, a point of interest, and we are having SMT divergence at the previous candle's high. The gasoline is taking the previous candle's high while the crude oil is creating this failure swing. I traded the crude oil because the forex firm doesn't have the gasoline. It retraced into that fair value gap. Now that we have a point of interest on the hourly chart, a swing point formation, now we can trade the market maker sell model to the downside, and we will mark these lows, these failure swings as our target, and I will drop down to the 5-minute chart. So here on the 5-minute chart, we have the intra candle change in the state of delivery. Now all we need is a continuation order block. By the time I got into the chart, the price was already expanding, so I traded the continuation entry. The continuation entries are also the best entries because you have to put your stop loss very small compared to the original change in the state of delivery entry. I waited for the opposing candles. The first opposing candles we have are up close candles into the fair value gap, followed by closure below. So I enter on this candle, but because of the spread, it took me out at this point. So what I did was I waited for another continuation entry to the downside. So now here you can see we have up close candles followed by closure below into a propulsion block. This is also a continuation signature and we are having SMT divergence at this high. The gasoline is taking this high and having a different while the crude oil is weaker. So this is our SMT divergence. Now this is a closure below a series of up close candles. So what I did was I entered the next candle, my stop loss above this high, and I targeted to R. We expanded to the downside, forming a continuation order block for another potential entry, and our 2-hour objective was reached. So these were the two trade breakdowns that I took today. I thought I would share this with you so it can help you with your execution, your thought process. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and let me know in the comment section if you want more breakdown like this, and see you in the next one.